Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here I am recording this on the evening of Friday, April 26th, after AMC closed the week at a price of $3.41, being up almost 4% on the day, but then, drawing back about 4% in the after hours. But, over the course of the week, it was up almost 8% with the close at 341, and I do think it has been a pretty good week. There are a couple of things I do want to go over, zooming in on the chart, but before I do that, I did want to go over this parallel channel that I have drawn here in white. As you can see, we have broken above it and broken below it on multiple occasions. So, it may not be that significant, but I did just want to point it out because looking at the current price, maybe there is something there. And so this trend line, the bottom of the channel, is based on the low hit on September 8th of last year, and then the other bottom pivot point is based on the low hit on January 5th. The top of the channel, that pivot point, is based on, I believe, the close of December 4th. And so that is how you would draw that channel. And so really, I just wanted to be considering the bottom of that channel as I do zoom in on the chart here. And so these are all levels that I went over in last week's video, and also, the shaded channel I have gone over in previous videos. And so here, looking at the price, it stands out to me that price is above that downtrend, the base of that channel. Maybe that's significant, maybe that's not. I'm not really sure. But one thing that does stand out to me looking at the price action of AMC over the past week since hitting the low on April 16th is we have seen some pretty notable candles to the upside, followed by consolidation. And so I'm wondering if this is a bull flag, if we will see a break to the upside. One thing that is a little bit discouraging about it is we did close just below the 382 from this retracement here, going from the high hit on February 28th, coming down to that low on April 16th. And so that 382 level is at a price of $3.41.9, or, $3.42. We closed just below it, and we have seen multiple wicks above that level over the past week. Also getting a close on Monday the 22nd at a price of actually, $3.42, so just about at that level. And then we did get a little bit of a pullback on Tuesday, closing at $3.39. Another pullback followed by this bounce here on Thursday. And we've really just seen, 4 wicks over the past week, not being able to get a convincing close above $3.41.9. So it is quite possible that is acting as resistance. We might struggle to get above it. Maybe we retrace over the course of the next week to the 236 here at a price of $3.02.2, maybe coming back down to $3 a share and bouncing off of this downtrend if it is significant. Might not be. But, if we were not able to break above the 382, I could definitely see a pullback to the 236. That makes sense. And also, we do have a good amount of consolidation over here at the beginning of April, as well as over here, forming a little mini bull flag over here on the way up. And so with that consolidation, if I do throw up the volume profile, it's possible, yes, we do see a little bit of a volume shelf there. So I could see price pulling back to maybe $3.05, $3, somewhere around there, if we're not able to get above the 382. But if we are able to get above that level, as you notice in the volume profile, we don't have much price action above that level until we get to filling this gap here, getting back to this region here, the golden pocket of that Fibonacci retracement between the 618 and the 65% retracement levels. And so that would be getting to a price of $4.06.1 to $4.14.8 really just getting above $4 a share. And so I could definitely see some wicks to above that level, but then maybe getting a pullback to the open of March 28th, which was at a price of $3.84. Maybe we'd find a little bit of support there, as we did gap down to that level. So with that price action there, maybe that would be serving as support. But also, this yellow line here, which marks the low hit on February 6th, that is at a price of $3.58.5. I do think it would be good for us to start getting some closes above that. So I would look for next week closes above $3.41.9 and $3.58.5. And actually just below that level, just below that yellow line, we do see the high that was hit on Tuesday, April 23rd, at a price of $3.55. I actually see that level as being the significant one that we need to be getting a close above. If we get a wick above it, that's great. But if we're not getting closes above it, we're not seeing confirmation of price action moving higher. And so that's what we need to see. Closes above $3.55, ideally $3.59 above this prior low. And then potentially maybe next week or maybe the week after, filling this gap, getting to the golden pocket between 406 and 415, maybe consolidating there before continuing higher to test these levels here, like 510, which was the high hit on February 28th. So, that would be great to see, maybe by the end of May. But for next week, the week starting Monday, April 29th, I do think it would be good, especially to see the month close on the 30th, on Tuesday, above $3.58.5. I think that would be showing a lot of strength and that we could be seeing much higher prices. But, even if that doesn't happen next week, I do think that we will be seeing much higher prices later this year. So I'm feeling good about it. I hope you guys are too. And I hope you have a great weekend. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.